You're watching Mirror 7 News. Stay informed, stay ahead for more news.
You might have noticed some surprising movements in the precious metals market recently. Gold prices have dropped dramatically, over 5% in a single day, marking the largest single-day decline in more than a decade. This sudden fall has also affected silver and platinum, which had seen impressive gains earlier this year. Essentially, what we're witnessing is a broad pullback in metals as investors step back from a record-breaking buying frenzy. Gold futures fell about 5.2% by Tuesday afternoon, after earlier slipping as much as 6.3%, a drop not seen since June 2013. Silver and platinum, which have been outperforming gold with gains of 60% and 66% respectively this year, also experienced sharp declines. Silver down 6.7% and platinum 7.2%. These metals had been considered safe haven investments, attracting more and more investors in a climate of economic uncertainty, but the market now appears to be undergoing a technical correction, as analysts like Suki Cooper from Standard Chartered point out. Essentially, after such rapid growth, some profit-taking was expected. Art Melek, the global head of commodity strategy at TD Securities, explained that dealers are cashing in after a very strong rally, and he noted that such historically steep climbs are rarely sustainable over long periods. Another factor contributing to the decline is the strength of the US dollar. As the dollar rises, it makes gold more expensive for investors overseas, putting additional pressure on prices. On Tuesday, the dollar index climbed about 0.4%, further influencing the metals market. Despite the recent fall, forecasts for gold remain bullish in the medium term. Bank of America recently set an ambitious $5,000 per ounce target for 2026, while HSBC adjusted its 2025 forecast to around $3,950. Analysts from other major banks had previously been more cautious, with JP Morgan and Citigroup projecting prices closer to $3,000. Silver's outlook has been lifted as well, with Bank of America projecting $65 per ounce, though experts caution that silver could see heightened volatility due to liquidity issues. The surge in metals earlier this year was fueled by economic and policy uncertainty, from inflation concerns to tariffs and geopolitical tensions. Investors like Ray Dalio have highlighted gold and other precious metals as safe havens, especially when traditional assets such as stocks are underperforming. Platinum's rise, meanwhile, has been supported by strong demand from jewelers and the automotive industry. So while this sudden drop might look alarming at first glance, it's largely seen as a normal market correction after an unusually strong rally. The key takeaway is that precious metals remain an attractive option for investors seeking security, even if short-term fluctuations are now more pronounced. Stay subscribed for more videos.